It is, people make this assumption that the currency is backed by whatever, gold or what have you, when the reality is the central banks own the gold that the taxpayers paid for. So this huge debate on who owns the gold, I find to be extraordinarily interesting, but it also brings up why you have to become your own central banker and hold your own gold and silver in your possession. So yes, Italy is trying to change the laws. Well, I do think that part of it has to do with the Fed being between a rock and a hard place, because much as they want to lower interest rates to stimulate more money printing and all of that, and therefore inflation. And certainly looking around the globe, geopolitics, we've got war continuing on between Russia and Ukraine. We've got still upheaval in the Middle East and actually between China, et cetera, and the looming potential war with Venezuela and the US, what's happening there. But I actually think that this is much bigger than that. I agree with you. And it really started almost this time last year, last January, when we saw a major shift in the gold and silver markets. And in terms of the spot market, which I'll come back to in a second, but typically in the US, this is a contract-based market. They're just selling and buying the futures to get that little pickup in, the difference between the two. However, what happened last January, you might recall, is a big shift in demand, so that instead of those contracts being traded, big entities were taking delivery of the physical markets. And so I think that what's happening today is really more attached to that, as that trend cycle where it was the paper contracts that were dictating the global price. I think now it's more the physical markets that are dictating that price, because in those contracts, there's no scarcity. They can create as much gold and silver as they want to. And frankly, I'm a little surprised that that's not happening more, to be perfectly frank with you. And I'm talking about from a government perspective, because a rising gold price is an indication of a failing currency and a looming crisis. And I find it really interesting, all of the talking heads on, Bloomberg and CNBC or any of those those supposed news channels that are pushing an agenda. And what are they saying? Well, if you're concerned about geopolitics, buy gold. If you're concerned about the overvaluation in the markets, buy gold. I mean, now when you hear those talking heads touting buying gold, it's not the contracts that a lot of the people are going to, if they really understand what's happening in the markets, because all you're getting there is a reflection of the spot market, but it's the underlying structure of the pricing mechanism that is now going to physical supply and demand, which is one big reason why silver has been outperforming gold this year. Well, the reality is all of the data is extremely murky. And we're not just talking about the gold and silver markets. I think the gold and silver markets are actually the headlights to see what's really coming, because even, today we got out the GDP report, and this is the best report since 1979, except there's no good data that's coming through for anything. So I feel like we are inside of a race car. And it's pitch black out, and we have no headlights. We don't know where we're going. You use the gold and silver as those headlights, because that's really what's screaming that there is a looming crisis. We just don't know when we're going to hit a wall. And that's why it's so critically important to lay that foundation of physical gold and silver in your possession, not those digital or paper contracts. No, it's so much bigger than this. And even though we've seen that run, the reality is that and the reality is too that gold and silver have been outperforming most other intangible assets since what, 2000, 1999, right? But it's been hidden up until recently. So, I don't think we're getting any good data on anything, not that we did before, but now with all of the cuts that happened in the US government, we're getting even worse data than we were. We're flying blind. You can't believe anything that they're saying. So yes, I think all the data is murky, even as to who is really pushing it. Is it the ETF market, or is that just a reflection of the retail demand on this? But I can tell you, I think in the physical markets, we're definitely seeing demand go up a lot. I wouldn't say exploding yet, which means I think there's a lot more to come next year. Well, yeah. I would have thought, and actually, as high as that may sound, the true fundamental value, what you're talking about is the market's intrinsic value. And you don't get good price discovery on any of that. But really, let's kind of talk about the squeeze a little bit, because we're looking at two different markets, but we're talking about them as if they're the same market. So there is the trading market, and that's really where that squeeze that you're talking about comes in, because it's just been like Wall Street always has to have something to hype, right? So they're funneling into the silver contracts, the gold contracts. However, in the real world, both silver and gold are used in every single sector of the global economy. And so in the manufacturing sector, when you're looking at the slowdown in the global economy, that's where you would not see a squeeze, but there needs to be. And to me, a squeeze doesn't necessarily mean that there is a top on it and then it's going to implode. In terms of contracts, that could be applicable. But in terms of sound money, physical gold and physical silver, when demand in one area, let's say it's the manufacturing because of a global slowdown, happens in this area, well, look at what the central banks are doing for themselves. And if you think we're actually even getting any good data there is this bridge in Brooklyn I could sell you. I don't own it, mind you, because the central banks have been accumulating gold at basically the fastest level in history over the last number of years. But that accumulation really started in 2005. It did not just start. And that coincides with what happened with the great financial crisis in 2008. That's when it became visible. It was happening before that. And I think that that's really what those gold and silver, the spot prices are telling us, is that something extraordinarily nasty this way comes. That's why I said, that's the headlight, right? That's what's giving you clarity and safety. And yeah, there is going to be a squeeze, but that's because there is, unlike those gold and silver contracts, there's a limited amount of this stuff. Silver does get used up in production. Gold is recoverable. Gold is the primary currency metal. Silver is the secondary currency metal. And I will tell you this, because very often in my work, I go to a currency converter chart. And I'll look at go to whatever one you want, pick any currency at all that you want, and then you do it against the US dollar, you do it against spot silver, and then spot gold. Now, typically when I've done this in the past, what we have seen, I would say about 99.3% of the time, is that spot gold always outperforms spot silver, and spot gold always 100% of the time outperforms the US dollar. And that is certainly happening in terms of the US dollar. But what we're actually, and I know your viewers are going to want to know this because this is a big question that comes up all the time, is that that gold and silver ratio, which was like this. I mean, it was off the charts. That's why you can't even see my hand. And history shows us that as we move toward hyperinflation, what we see is that narrowing of the gold and silver ratio. But then again, once we are firmly entrenched, I should say, and the hyperinflation becomes more visible, then it's not that you're going to see that widen. You're just going to see, probably, if history repeats itself, you're going to see gold outperform silver because it's the primary currency metal. And that is against which they revalue those currencies, which is another interesting point because you never hear the talking heads in the past talk about that revaluation trade. And now that's such a good thing. It may be for traders, but it's not for the normal person out there that is struggling to feed their families and to pay their mortgage and their debts and build a life. I mean, well, it's the start of a big global war. And that's why I said gold and silver, what you're really referring to is relative, right? So the dollar relative to the yen or the dollar relative to the euro, etc. And that doesn't really matter to the normal person unless you're traveling, then maybe it matters a little bit. What actually matters to the normal person is the purchasing power of that currency. So the relative trade is, and it masked what was really happening for a very, very long time. But gold and silver, what's happening in those markets is shining a spotlight in the again, I go back to that devaluation trade. And I like that you brought up, obviously, you're in Germany, so this is going to be much clearer. And didn't they recently kind of go, who cares about the fiscal rules? Boop, let's throw those out the window when they know what their experience was in the 20s, right?
No, it's...
Which I think is extremely interesting. I thought that was extremely interesting. You just actually said it all in that one sentence. It is, people make this assumption that the currency is backed by whatever, gold or what have you, when the reality is the central banks own the gold that the taxpayers paid for. So this huge debate on who owns the gold, I find to be extraordinarily interesting, but it also brings up why you have to become your own central banker and hold your own gold and silver in your possession. So yes, Italy is trying to change the laws. But here's the other part about Italy, because when they became part of the euro, the Eurozone, then they had to basically give their gold that is supposed to be owned by the Italian central bank, but really it's always been pitched, all over the world. Isn't it pitched as the people own the gold because the government is supposed to represent the people? I find this extremely, extremely interesting to see how this all plays out. Because what I think we're really seeing and what the hyperinflation will do is it'll bring that curtain down. And people will start to realize that they own nothing. That, it's very obvious and I haven't looked at the euro, but I could because I have some here. But, if you ever bother to look at the bills, like on this bill, what does it say? Federal Reserve note. Well, a note is a debt instrument, and the Federal Reserve is a private corporation. So when you stop and think about it just for a second, what we're all really working for is private corporate debt. And we take what the individual, what the public works for, all those tax dollars that went into buying, and most of that gold was bought after World War II, but that those were still individual public tax dollars that bought that. Why is that okay with everybody? Why I don't want to work for corporate debt. I want to work for sound money. And if we were all working for sound money, then I'm telling you right now, the average wage would be a whole lot higher than it is. So I think that is a really important and very interesting point.